traders, Gary Wagner here. Approximately 1 o'clock in Honolulu, 7 o'clock in New York on Monday, 30th day of August 2021, and this is the daily report for gold and silver. We had fractional declines in both gold and silver today, and while I remain extremely bullish on both metals, there is a caveat. The caveat to gold and silver right now is the jobs report that will come out on Friday. The forecast is 600,000 new jobs added this month, meaning in August. That will come out, of course, in September, right at the beginning on Friday. And that's being factored into the market. So if it comes in well above or well below, it will have a solid reaction to the price of precious metals. Silver is a different story. We have first delivery day notice coming up, and that will occur in just a couple of days. So we are forced to either roll over to a December position or simply take profits. When we talk about silver during the show, I will discuss my personal bias, and the show will begin now. Gold futures closed today at $1,812.70. It is a decline of about 0.4% or $6.80 on the day. But what I find most interesting is not the decline itself, but the intraday high here and the intraday low here. We will cover that when we pull up our first chart. Although many analysts are citing dollar strength as one of the factors taking gold lower, the dollar itself is only trading up by 0.03% at 92.72, and the high itself was 92.79. So I don't see that as any mitigating factor within the dollar as it reflects to gold. We are looking at a daily chart of December gold as though it closed down about $6 or 0.3% on the day. I still remain extremely bullish on gold. However, what I found most interesting today is the range in terms of the high and the low, because they came to really key technical numbers. In the case of the high, 1827.20, the current 61.8% Fibonacci retracement, and we came just shy of that number. In fact, it does seem as though that could have provided some technical resistance. The same is true for support. We have the 100-day moving average crossing above the 200-day. That is certainly bullish, but it is much too early to tell. It has just crossed, it has not completed. But if you look at the low today, that came in right at just below both of those moving averages in terms of the intraday low. However, it opened and then closed, even with today's decline, above both of those key levels. It is for that reason that I remain bullish, and the unknown is going to be the jobs report on Friday for this month's new additional non-farm payroll jobs. Currently, forecasts are estimating 600,000. That is certainly being factored into the market. However, it doesn't account for what damage might have been caused by the Delta variant and the increase in COVID cases, as I report in my opening letter. The key to the jobs report is with a forecast out of 600,000. If we see those numbers come in below or well below that number, that's going to provide some incentive and a bullish kick to move gold pricing above this current key level of resistance, which resides between 1627, that is a 618% retracement, and then just above that is the highs that came in August that come in at around 1835, because that is where I currently see potential resistance in the market. We did talk about that on Friday. For now, maintain your current long position. I am considering moving stops up, but they would have to go below the 50-day moving average, and that is currently setting at 1794, roughly at the same price point we entered the market on Friday. Silver did decline but in terms of a percentage drawdown was approximately half of the decline that we saw in gold. Silver lost 0.2%, almost 5 cents, currently fixed in the September contract month at 24.01 cents. We did send out a special trade alert, and as we pull up our charts, I will discuss why I'm giving you two options, either cover and take profits or simply roll over, because the September contract will come to first notice day at the beginning of September, which of course will occur in just a couple of days. We're looking at a daily chart of September futures. We did send out a trade alert today, but the trade alert is not based upon price action as much as the fact that the September contract will be coming to first day notice right at the beginning of September, which occurs in a couple of days. For that reason, I said that you can either pull profits here or you can simply roll into a December position. Now, my sense is that we will see silver move higher. I continue to be bullish on silver as long as it maintains a price point above major support at 23.75. That is corresponding to the 78% fib retracement area. We're now trading overseas in Australia, and we have silver at 24.06. So in terms of the spread between the September and December contract, we have just put up our futures board so you can see the differential. Currently, we have the September contract at 24.015, and we have the December contract at 24.065, which means that our charting service has just adjusted the continuous contract to a December position, because when we look at the price of September, that's sitting right where it closed, $24.01. But nonetheless, my sense is that if you are bullish like I am, you will simply sell your September position. You'll pull profits of about 50 cents or $2,500 per COMEX contract and enter the long December position. If you want to pull profits, you would simply get out, hope for a dip, and on a dip, re-enter from the long side. As I said, I do favor a simple rollover, but I wanted to give you, our subscribers, the choice because there are two actions you can take based upon the fact that we do have to exit the September contract. Act accordingly based upon your sentiment for silver currently. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.